One thing that can affect mortgage rates is the federal funds rate, which influences how much it costs banks to borrow money from each other. While the Fed doesn't directly control mortgage rates, they do control the federal funds rate. The relationship between those two is why people have been watching closely to see when the Fed might lower the federal funds rate. Whenever they do that, that'll put downward pressure on mortgage rates. So the Fed meets next week, and three of the most important metrics they'll look at as they make their decision are number one, the rate of inflation, two, how many jobs the economy is adding, and three, the unemployment rate. So regarding the rate of inflation, we've all felt the impact of higher prices in just about everything we need to live over the last couple of years. The Fed has stated its goal is to get the rate of inflation back down to 2%. Right now, it's still higher than that, but moving in the right direction. Two, regarding how many jobs the economy is adding, the Fed also wants to see job growth slowly down consistently before taking any action on the federal funds rate. Data shows that while employers are still adding jobs, they're not adding as many as before. That's an indicator the economy is slowing down after being overheated for quite some time. This is an encouraging trend for the Fed to see. And three, regarding the unemployment rate, it may seem harsh, but a consistently rising unemployment rate is something the Fed needs to see before deciding to cut the federal funds rate. That's because a higher unemployment rate would mean reduced spending, and that would help get inflation back under control. So what does this mean? While mortgage rates are going to continue to be volatile in the days and months ahead, these are signs the economy is headed in the direction the Fed wants to see. But even with that, it's unlikely they'll cut the federal funds rate when they meet next week. Basically, we're seeing the first signs now, but they need more data and more time to feel confident that this is a consistent trend. Of course, the timing of when the Fed takes action could change because of new economic reports, world events, and other factors.